you very much. I'm excited to talk about Horizon. It's a copper company. It's coming out of the gate with 3 world-class assets. My name is Erfan Kazemi, and I'm the CEO of the company. And we're really excited to tell people about a new way to play copper.
Okay, and I'm thank you very much for coming on the show. I'm excited about this one. So new story, kind of new model in a way. Can you just sort of clarify what you mean by a copper company and a new way to play copper? What have you set up?
Yeah, so out of the gate, we've got 3 world-class assets. 2 of them in production, one's cash flowing, the other was a development asset. And there are passive interests on world-class mines. And so the idea is Horizon is going to be an aggressive consolidator of copper interests all over the world and build out the portfolio. And so there's very few copper companies out there, sub 500 million market cap, that can boast in having not only cash flowing asset, but assets in the first quartile in terms of production costs. So it's truly unique.
Right. And so given where you've come from, there's this expectation that surely this is a royalty company, but you haven't set it up like that. So what do you mean by passive interest?
Yeah, so we have a number of royalties in the portfolio right now, similar to the Antamina mine, which is the 3rd largest copper mine on a copper equivalent basis. We have a 1.66% MPI royalty. And so we have these royalty and quasi-royalty assets, but as Horizon continues to grow, it'll keep adding these passive interests. So minority positions in operating mines and assets going forward. And that allows us to have a larger population size of adding assets to the portfolio and allow us to eventually get the size and scale that you'd expect of a copper company.
Right. Okay. So I'm trying to get clear here because I think, I mean, was this set up as to kind of solve a problem for Sandstorm in the sense that people didn't get the kind of private component, which obviously it had with Hod Maden, etc. So you've got some royalties, you've got some passive interests. So what is it? You're not actually going to go and drill for copper yourselves. You're just collecting interest in copper companies. So how would one describe that? What's the best way?
Yeah, it's a unique way to play the copper field. So traditionally, when you've got copper mining companies, they have, over 50% ownership in a mine. They have technical teams that are operating it. And based on that model, you can't build out too many mines. You can't add to the portfolio because it just takes too much time. With Horizon, what you're getting is these royalties and quasi-royalty interests, whether it's the Oyu Tolgoi interests that we own through our 25% ownership of Entrée. That's a finance carried interest. It works very much like a royalty. Antamina, an MPI royalty. Hod Maden is a 30% interest in that mine, but the way the contractual agreement works, it's quasi-royalty as well. And so what you're seeing is us being kind of industrious in acquiring a lot of these interests and how they come up and form. Right now, we're not looking to acquire, 60%, 51% of an actual copper assets currently. Right now, we're building out the portfolio to get size and scale.
Right. So let's be really clear about this. Does it matter what it's called? Does it matter if it's called royalty, quasi-royalty, or other to you? Because how do you make money? How do you make money, and how does your company get valued, and how do people understand what that value should mean for them?
Yeah, I'm a numbers guy out of the gate. So I believe what is the actual cash flow the company will receive. So for example, you've got Antamina royalty that we have in our portfolio, which is cash flowing, $10+ million a year to Horizon shareholders. You can call that, a royalty. You can call it minority interest. You can call it whatever you like, as long as you get sustainable cash flows coming on an annual basis. And then when you look at our portfolio, we've got similar interests, like our 30% in Hod Maden, which just recently a company announced, SSR Mining, that they're taking an operating position in that asset. And so we've added this quality operator that has in-country, in-house expertise, that has experience in Turkey moving that project forward. And then our third asset is interest in Oyu Tolgoi. Again, it works very much like a royalty, but when it starts cash flowing, which is the thing that matters the most, it'll cash flow tremendous amounts to Horizon shareholders.
Right. So you give me one number I can latch onto. There was obviously with Antamina, which is 10 million cash flow. Show me the money. With Hod Maden, SSR jumping on board is great, but what are you envisioning the number coming to you will be? Same with Oyu Tolgoi. What will the number coming to you be? Cash is king, right?
Yeah. When you look at our complete portfolio at $4 copper, you're looking at, when all these assets are cash flowing, over $90 million US a year to Horizon shareholders. And so, that's over, close to about $13 million a year on Antamina $4 copper. At lower prices, $350, that's the $10 million per year. And then when Horizon operating interest in Hod Maden kicks in a few years' time, then you'll have an incremental $20+ million annually from that asset alone.
Okay, let's stick with the money. I want to come back to Hod Maden. So, what do you do with $90 million when this thing is fully optimized and the cash flow is flowing? Does it work like a royalty company? Do you continue to buy into passive interests, and what does that look like? How do you find them? Who's the team that's going to do that?
Yeah, that's where the symbiotic relationship with Sandstorm comes in. Sandstorm has the largest corporate development team in the royalty space, an incredibly large technical team, and they're scouring the planet looking for copper assets with precious metal byproduct. And that allows Horizon to get a first look on a number of different assets, and it allows Sandstorm to help provide cheap financing to Horizon to acquire that interest. Because, when you have large precious metal components coming from a copper asset, it allows for easier financing. And so over the next 24 months, we're hopeful that we'll be able to add another asset into the portfolio. And so you have this strong quality base of assets, cash flowing with Antamina, Hod Maden on the horizon, and then you'll be able to add more assets to the portfolio going forward.
So given the origins of Horizon Copper, is this just a proxy for Sandstorm? So if we like people like Sandstorm, they should like you? Or does this try to stand on its own 2 feet? You seem to be sharing some of the internal functions at Sandstorm in terms of the ability to find projects to buy. So, you indeed obviously are a director over there as well. So how do I, as an investor into copper, view you?
Yeah, so they have separate boards. I'm not a director of Sandstorm, but I am of Horizon Copper. And they'll make their own decisions going forward. And so Horizon will look for the cheapest form of financing, where it comes from whichever streamer. But there's this beautiful relationship out of the gate where you can build a portfolio where you have a supportive multi-billion-dollar enterprise value company in Sandstorm helping finance these acquisitions. And so when you look at what is the symmetry, what is the harmony that can happen, is you have Sandstorm's strategic direction in helping Horizon acquire these copper interests using a very cheap form of financing in royalties and streams.
Right, but you are CFO there. So, sorry, if you're not a director, you're a CFO still, or have you resigned?
Yeah, I'm still a CFO, but over the long run, once Horizon gets size and scale, there'll be natural transitions that happen.
Okay.
But really independent boards, and they'll be making their own determinations going forward.
Right. Okay. Do you think, is there anything wrong with people looking at Sandstorm and going, do you know what? They've done quite well. This is predominantly, this is effectively spin out of that. They'll probably do just as well. I mean, so do you want to deliberately distance yourselves? I mean, do you feel you need to? Is there an upside to distancing yourselves, or?
Well, I don't see an upside in I think that the honest truth is they're very interrelated. You have a symbiotic relationship that has been telegraphed for over the last year. And so I think as a Horizon shareholder, you get a lot of the size and scale that comes with Sandstorm, the expertise. Sandstorm looks at over 100 transactions in a year alone. And so Horizon shareholders get access to this massive corporate development pipeline. 2 of the assets in Horizon's portfolio were based on identifying these fantastic projects over 5 years ago. And then as the spin out of these copper interests came into Horizon, that's how Horizon was able to get them. And so I see that as a huge advantage, and we're looking forward to working with Sandstorm and moving forward.
Okay, nothing wrong with that. Talking about the financing, right? So this is obviously once you're able to announce that, I think you'll kind of be able to start trading, etc. So how are you structuring the balance sheet? How are you structuring your overheads? What does that look like?
Yeah, it's a great question. So we announced recently a $20 million financing. We're closing it shortly, and once it's closed, Horizon Copper will be trading on the TSX-V. In terms of the balance sheet, a lot of the enterprise value in the company is based on these IOUs. And so in order to have these I guess viewers' benefits, Sandstorm had these incredible crown jewels within its portfolio, but they weren't necessarily precious metal or streams and royalties. So they transferred them over to Horizon, and in return, they took back a precious metal stream and some IOUs. And these IOUs allow the company, Horizon, to have tremendous torque. So you've got this enterprise value that's, $250 million, but the market cap is small. And so when you get changes in the commodity price, when there's an increase of, let's say, 10% enterprise value, the equity holders get close to 40+% increase in the market cap. And so with torque, as a finance guy, I always get concerned about leverage, interest rates, covenants, ability to pay it back. And so that's what's so unique about how Horizon is structured. You've got, no financial covenants with respect to these IOUs. They're really IOUs that are structured as equity and weighting. Horizon has the ability to pay back these IOUs at future prices, subject to Sandstorm not owning more than 34% of Horizon. And the interest rates are very low. A lot of the debt is non-interest bearing until some of these assets get into production. And so you've got negative yield debt, no financial covenants, and Horizon's ability to pay it back in shares at future prices. And so when I look at the balance sheet, I say you get access to these incredible assets, you get tremendous amount of torque, and you've got a pipeline already built in there where you don't have to necessarily go raise equity to move any of your development assets forward, because Horizon has tremendous working capital, about $40 million US, earmarked for its capex on the Hod Maden project.
Okay, so using the phrase IOUs, I'm sure they're not labeled as such with the lawyers, are they? I mean, what is, because you talk in your press releases about convertible debt, convertible notes as well. So what is the different type of money they typically do? You're saying that in sort of non-binding term sheets, etc. But things like convertible notes do have some liens on them, covenants on them, obligations, definitely got interest on them. So when you say it's a very flexible structure you kind of given yourself there, can you explain how all the money is sort of underwritten or how you've done it? So I'm really sort of keen to get it. I get the support that you're getting, but also at the same time, I want to understand what the kind of restrictions on your ability to do business might be.
So when the assets were transferred to Horizon, Sandstorm took back debt. That debt is in excess of $200 million US. Those are the debt instruments I'm talking about in terms of no financial covenants, negative yield, ability to pay back in shares. So they're very much equity and weighting. Now, when we announced our recent financing to acquire the Hod Maden or the Antamina interest, it came with a convert with a third party, not Sandstorm. That is about $15 million US, which is a tiny portion of our enterprise value. And that's your traditional convert. It's a partner that we identified over the last few months. We interviewed actually different funds, and we felt that this group was the most in line with our long-term strategic play and plan. So, but the Sandstorm debt is payable in shares. So it's not your traditional convert at a specific strike price.
Okay, understood. So that 15 million convert, 8% usual stuff, really fairly vanilla, which we shall call it. Okay, so when you talk about the enterprise, can you remind me, what is the enterprise value at the moment?
It's about $220 million US.
Okay, fine. And in terms of how you tell the growth story, is it clearly through future revenues, and which with the three key assets that you've got at the moment? How do we judge that in terms of the multiples we should put on that? Because obviously, with royalties, it's kind of relatively easy on the precious metal side. On things like base, battery metals, it's a little bit harder. We've seen a huge range in terms of those values out there with royalty companies. How do you think we should look at it?
You can look at it in many different ways. So you alluded to royalty companies, and very much our portfolio out of the gate is quasi royalties, and our most material asset is a royalty. And so you can look at what are you trading on an enterprise value basis based on your cash flows. And so base metal royalty companies, so not precious metal, base metal trade around 10 or 11 times EV to EBITDA. If you look at how we valued out of the gate, we're nearly half that. So there's tremendous upside in terms of a re-rating. The other way you can look at it is we're a producing company. And if you look at long life assets that are low cost, what do they trade at? And we're similarly traded at about half that. And so a lot of value proposition. But the way I look at it is more nuanced. I look at it and say, what is the cash flow this company is going to get and what growth do they have? And so when you look at the cash flow based on our enterprise value, we screen very well based on the percentages. And there's some slides on our website that you can look at and look at peers and such. But what's unique to Horizon is not only is it cash flowing because of the Antamina royalty, but it has a growth profile already built in. You don't get the trap where people are cash flowing mining companies and they got to use all their operating cash flow to put back in investing just to keep that asset alive. And traditionally what you get is that cash flow coming from that asset, but that asset is depleting, and so your growth is declining. With Horizon, you've got 2 world-class assets in addition to Antamina. And so you've got this built-in growth that you're getting essentially for free. And that's growth that you don't necessarily have to go and buy. It's built in the portfolio. We have $40 million US working capital is earmarked for the equity check for the Hod Maden build as part of that CapEx. And so you can look at it and say you've got a cash flowing asset, you've got 2 development assets that'll be cash flowing over time, but you don't have to necessarily go raise equity. So that growth is already built into that portfolio. The other thing I think is worthwhile considering is, not only do you get, that cash flow quality and the valuation from a royalty or your producer, and you've got this built-in growth, but what are the quality of the assets within that portfolio? Because there's going to be pullback in commodity prices over the next 12 to 18 months. And that's natural. We're big bulls in copper, but there's always going to be pullback. So how are those assets going to survive in a sudden pullback? Are companies who are operating those assets, are they going to go invest, drill? And you tend to find, at least over our experience, that if you get first quartile assets and low cost assets, it's very cheap to drill and expand that resource and reserve. And so that's one of the unique things that we have in our portfolio as well.
Okay, and let me come back to and I appreciate you going through that in a bit of detail. With regards to Hod Maden, it's had a sort of difficult existence under Sandstorm, and you've got it now, but you've still got to go through some of those same steps. It's a big project. It's 20 million pounds of copper and over 156,000 ounces of gold for 13 years. It's and no doubt there'll be exploration and hopefully a longer life than that. But you're still having to help look at the kind of debt financing for the development capital. I guess you're trying to kind of again wrap your heads around the projected capital and operating costs, etc. Post this kind of inflationary and kind of COVID environment that we've been in. It's affected a lot of wannabe producers, a lot of advanced developers, trying to understand their economics. So I think earlier you said, in the next few years to get into production, how far are you along those discussions, that discovery process of actually understanding the economics around this?
Thanks for asking about Hod Maden. I think it's been in the news recently because while we came into the asset many years ago, we own 30% of it. Our Turkish partner, Lydia Made Çelik, which part of a, Çelik holding with a Turkish conglomerate, they're a private company. So they weren't publicly discussing a lot of the timelines and these issues. We would get information and pass along to the market as was our requirement as a public company. But now what's changed over the last 12 months is, one, we've got our key permits at that asset being the EIA and the forestry permit. So it has its key permits. 2, recently, SSR Mining just announced that they acquired 40%. So now you have SSR Mining with 40%, Lydia, which is a Turkish partner, at 30%, and Horizon at 30%. So the operator of that asset is SSR Mining, a large multinational mining company. And they publicly announced a few things. One, they're taking over the project financing that Lydia had been working on. And they've done due diligence on that asset. They think it's phenomenal. They've done due diligence on the feasibility study. And they're publicly stating that, they found ways they can optimize that asset even more. And mining companies say that, but they're the one mining company that actually has built and operated mines in Turkey. And the mines that they built, being Çöpler, they brought on time and under budget. And they exceeded nearly all metrics from what was the mine plan previously to what it is now under their leadership. And so when they say that, they're moving to commercial production in 2027, that they're moving all these milestones forward, I think the market truly believes that. And it's easy to say that, but they actually had the development team that moved that Turkish asset, Çöpler, that performed incredibly well, was on time and under budget. And now they're moving that entire development team to Hod Maden. And so we're really excited for that in the last 12 months, we got those key permits, the project financing is continuing to advance, and now SSR Mining, a large multi-billion-dollar company, has stepped in with in-house country expertise.
Right. How many employees have you got, or how many employees do you imagine you'll need to kind of run the business?
Horizon actually only has a couple employees. So, I don't take a salary. Over the last year, I've been in the role of CEO, and my salary is $1. And so we're really trying to get Horizon up and running and going. And we're utilizing the corporate development team of Sandstorm and the technical team to go and find assets. And so we're trying to keep G&A quite low. And over the next year, I don't see that being over $1 million US.
Okay. That's kind of where I was going in terms of, and I guess the next question, following question, lead question from that would be, so what do you guys do all day? Obviously, you got other jobs as well. So in terms of the amount of work required here at Horizon isn't onerous because you've got positions, Quasi royalty, passive investments in 3 companies now, and the Sandstorm guys will help you find the next big thing, hopefully. So there's not too much to do. So therefore, investors shouldn't expect to hear from you on a regular basis. Is that true?
The first part is true in the sense that it doesn't require much effort to operate a royalty. You just collect the cash. And being a passive minority holder, you're not actually having to go and hire staff to build that project. I think one of the key determinations is who are the operating entities. In our portfolio, you got Teck, Glencore, Rio Tinto, SSR Mining, BHP, all world-class operators, and they know what they're doing. But in terms of getting the news out, we are actually going and explaining what Horizon is. There's a lot of actual demand from investors for good copper names. When you look at, copper companies below $1 billion, below $500 million, there aren't many options for investors. And so we find this unique niche where we're actually cash flowing and we've got world-class assets. So investors are actually going to hear quite a lot from me going forward. So the second part of your question is, no, there's going to be a lot of information, a lot of news coming out over the next 12 months, and a lot of sitting down with investors and funds and explaining the Horizon story.